Good evening, ladies and gentlemen. Today we have the privilege of hosting Mr. Rajagopal Menon, Vice President of WazirX, a leading cryptocurrency exchange platform. As the world becomes increasingly interested in the potential of crypto assets and the future of decentralized finance, we have invited Mr. Menon to shed light on the recent developments in the regulatory landscape and the importance of data transparency in this rapidly evolving industry. Without further ado, let's dive into this insightful conversation. The G20 New Delhi Leaders Declaration recently endorsed the Financial Stability Board's recommendations for the regulation and oversight of crypto assets activities. Mr. Menon, could you elaborate on these recommendations and their potential impact on the crypto industry?
Thanks, Monica, for having me. So the story behind this report is very interesting. India assumed the presidency of G20 last year, and throughout the years, both Prime Minister Modi and Nirmala Sitharaman, the finance minister, have been stressing that there needs to be a global effort to regulate crypto. Now, to this end, what the presidency, G20 presidency under India did was that it invited the IMF and the FSB to collaborate together to create this report on recommendations for the way forward for crypto regulation. Now, typically, these both, the domains of both these entities are different, but they came together for the first time at India's request, and they created this report. Now, the beauty of this report is that it addresses, because it was requested by India, it addresses a lot of issues that are pain points for the Indians. So it talks about, not making crypto legal tender, about how crypto can, how you can prevent financial instability, what are the reporting formats, and the list is long and extensive. So, these are the major headlines of the report, which cover all the issues that the Indians had issues with. Furthermore, it gives a roadmap on how you can go about regulating crypto. Now, it gives timelines and the entities involved, the gaps that are there. So it's a fairly detailed report. And the most important thing in the report was that they said that you cannot ban crypto. It's not you should, or whether you should, or whether you want to, but it's impossible to ban crypto because it leads to all unintended consequences. Everything goes underground, it becomes difficult to report it, crime just increases. So those are the major headlines of the synthesis report, as it is called, which was created by the IMF and the FSB at the request of India.
So as the synthesis paper cautioned against blanket ban on crypto assets and emphasized the need for targeted restrictions and sound monetary policies. So how can these measures strike a balance between innovation and regulation in the crypto market?
So Monica, there is this rule in regulation. It's called the Goldilocks zone of regulation. What it means is that regulation should not be too strict, which doesn't allow the sector to innovate, nor should it be too lenient. So you have a lot of problems that authorities have with crypto, and rightly so. So if you're too lenient, then it'll be a free for all. It'll be a wild west. So the Goldilocks zone is a golden balance between not being too strict and not being too lenient. Now, and the synthesis report is exactly in that direction. Now, when you try and ban crypto, as lots of countries have tried, even the most powerful autocratic country in the world, China, has tried it, and it's failed. Even in India, what has happened is that, you can get too strict with crypto. For example, when you apply taxes like a 1% TDS, what has happened is that all the volumes have moved from Indian exchanges to foreign exchanges. So the volumes in Indian exchanges have fallen by 90%, and this benefits nobody. Everybody is in trouble. The government doesn't make money. Indian exchanges suffer, and these exchanges are beyond the remit of any authority. Who knows what is happening in these exchanges? There are also problems like shadow bans that happen. So banks are not allowed. There's a shadow bank in place currently in India. So where banks don't like to work with crypto companies. So when you say blanket ban, it also should include all the other associated tricks that governments do to inhibit crypto, because it just doesn't work. what would work is a very sensible approach towards crypto. Right now the government is charging 1% TDS. What it means is that 1% of capital of every trade that you do is blocked, and you get it only at the end of the year when you file your returns. Now, what it does is that all the traders have moved abroad, all the high frequency guys have moved abroad. Now, if you wanted to really track crypto transactions, all you have to do is levy a 0.01% fee instead of a 1% TDS. So there are nuances in policy which happen over a period of time, and I'm hopeful that things will improve for India after this report.
Now, many of these countries, they're coming with their own digital currencies, which is called CBDC. So, in view of their own, these local digital currencies, I mean, then how will cryptocurrencies will stay relevant?
So I can talk for India. So, in India, unfortunately, we are so far ahead in the payments ecosystem. We do the largest amount of payments in the world. Our UPI and Aadhaar stack are the envy of the most advanced economies in the world. Even the US doesn't have such a superb system like India. So what they're doing is that in the process of catch up, the easiest way to do is to do a CBDC. That is what others are doing. In India, we have a very good system. So what the RBI is doing, I think, is that it wants to say at the forefront of innovation. So it is saying, ठीक, हम लोग CBDC भी try करके देखते हैं क्या हो रहा है. So that is the effort of the RBI, because it has been so good at payments, and it's being so good at what they're doing because they've constantly experimented. So that's what they're doing. Now, the basic difference between a CBDC in India and a crypto is that you would say that CBDC is the digital version of the Indian rupee. It's called the e-rupee. 1 rupee as a note, or a 10 rupee note is equal to 10 rupees in CBDC, eCBDC or e-rupee. Now, when it comes to India, what we are saying, the crypto industry is saying, is that we don't want to dislodge the INR. We are not coming to compete with the fiat currency of India. All we are saying is treat crypto like an asset. Because in the last 15 years, if you've looked, Bitcoin has given the most, the best rate of return any asset has done in the history of mankind. Now, do you want to deprive Indians of such a, of such an asset? That is the question that we want to ask. So in India, we are saying use crypto for investment, and that also do it after a lot of due diligence, understand what you're getting into, and then use it for, maybe, you do it in a sensible manner over a long period of time, and hopefully something good will come out of it. And CBDCs would be used for transactions. So, you're more immediate, you want to buy atta, chawal, and so on and so forth. It would be competing with the UPI to do your immediate transactions. When you want to call up, when you want to order on Zomato or Swiggy or, Amazon, that's when you would be using your CBDC. In India, the idea is not to replace payments on Amazon with Bitcoin.
The IMF-FSB paper recommended the development of a common framework to collect test data on digital money and crypto assets used as a means of payment enabled by fintech firms. Now, how can this framework contribute to a better understanding of the flow and stocks of crypto assets on a global scale?
So what is happening right now is that every government has realized that you cannot regulate in isolation. But governments have different requirements. Like, the priorities of India are completely different from the priorities of the US of A. Now, how do you get regulations, Indian regulators and US regulators in sync? Okay, or they're talking the same language. So you establish a set of guidelines saying that this is the guide for regulation the world over. This is the minimum threshold. Okay, and then what you want is that you can calibrate it as per your requirements and your specific local cultures and in local customs. So that's what the guides will do. The FSB report has absolutely laid down guidelines for all G20 countries, and I suspect it will be adopted by countries the world over. Now, what it gives the local governments a lot of leeway in tweaking these guidelines for their specific situations. So that is how it will all evolve over a period of time. It will start with a basic set of guidelines, and then some governments will take it here and there depending upon their requirements.
So what can be the potential benefits of these regulations for the crypto industry in India, if you talk about India?
So what it does is that it removes a lot of apprehensions of the government. The government was saying that, I cannot regulate alone. I don't have enough data. Now, when all the governments of the world are talking to each other and all the regulators, and you build systems into place where data is shared. Okay, so crypto is no longer a black hole where you don't know what is happening. Now, there are already rules in place that are happening over a period of time where, there's something called a travel rule where you have to detect transactions happening from one wallet to the other. Now, all those systems and processes will come into place, giving a lot of comfort to governments the world over. So what are the governments worried about? The governments are worried about financial stability, monetary stability. They're worried about their ability to issue fiat. That is the control of their local currency. What they're worried about is terrorist financing and money laundering. Now, if systems are put into place to address all these measures, as the synthesis report does, and I'm not saying it will happen immediately, but it will happen over a period of time, governments will get a lot of respite, will get a lot of reassurance, saying that, hey, okay, fine. Over a period of time, after the tests are done and you have test runs and so on and so forth, governments will have enough data to actually, frame regulations or tweak regulations the way they want to.
Okay, so with this, we have come to the end of this conversation. Thank you, Mr. Menon, for sharing your insights and expertise on these important topics. Thank you so much.
Thank you, Monica.